Hello guys and welcome to another video. My name's Mark, I'm an entrepreneur and property investor. In today's video we're talking about the house price update, what is going on under the hood for the UK house prices. And today is the 6th of January. We're filming this as early as we possibly can in the morning so that you can bring it to you the same day. Our aim is to get this out to you by about 2 o'clock today. If you appreciate all this effort that we go into to get this data and analysis out to you as quickly as we possibly can, please give this video a big like. It massively helps me out with the algorithm and means my content is pushed out to more people. And if you haven't already subscribed, why not consider subscribing? We are the home of a Dividend subscriber portfolio, and we haven't really paid much out yet because we've only just started it. But last month, £20 got paid out. On the 10th of this month, we'll be doing another draw, and every single month, I'm gonna put another £2,000 in, and whatever dividends we create from there, I'm gonna pay out to my subscribers. So that portfolio is gonna grow over time, and it means together we can take part in a passive income journey. So guys, let's get into the video. Let's start talking about what the Halifax have reported back. Now, the first headline figure I wanna go into is the 1.5% drop in house prices month on month. And this is looking backwards to December. Obviously, we're only at the very beginning of January, but this is December's data, 1.5% month-on-month decrease. What does that mean for me? Well, I had £3.5 million worth of property, well, 3.531 if we want to be precise, and I guess we need to be. That means today I have taken a hit of £52,970. Tom, you asked what that feels like. Not great, guys. Let's talk about it in a bit more of a holistic view than that, because there is opportunity coming. So stay with me and I'll talk about that. My new value of my portfolio, which we're going to update, we're going to track every single month, is £3.478 million. And I have about £1.7 million worth of debt on that, which means I'm at about 50-50 debt to equity ratio. I've still got plenty of insulation in there. I'm not feeling too worried in that terms, but it doesn't feel great seeing those numbers go down. It was much more fun in the last couple of years as they were going up, let me be very honest. That's 1.5% this month. That's a big single month's drop. Last month was the largest drop on record since 2008. It has slowed in terms of the pace of the drop, but it still represents a 2.5% quarterly drop for house prices in general. And that brings the average UK house price to 281,000. It was around 285,000 last month, and I think it almost got to 300,000 if we remember going back 3 or 4 months. So quite a significant drop in UK house prices. And why is this happening? Well, cost of living, rising borrowing rates, a lot of uncertainty in the markets, a lot of uncertainty in the economy. Layoffs, I read today that Amazon are making the biggest amount of layoffs they have. Salesforce have just announced 10% of their staff are going. Of course, we are having a weakening in the economy, and we're seeing it here very early on. When people get emotional about things like houses, they really start to negotiate, and it's a negotiable asset. I always say this about property, it's why I love it. You get to negotiate with the seller on the price you're going to pay. When it comes to the public markets and investing, for example, in the ETFs we do in the subscriber dividend portfolio, that price is fixed by the market. Whatever it's trading at, that is the price you're going to pay. Property, you can negotiate. So it's a real benefit to investing in this asset class. Let's look back though on the commentary that comes with the Halifax data. And this is looking back to November. So this is data from institutions such as the Bank of England, HMRC, on what was going on under the hood back in November. So year-on-year completions, so this is data from the HMRC on properties that are completed, 13.3% up. Now, I think we can disregard that data a little bit because it's looking back even further. It's going back 3 to 6 months when those sales were agreed and then they were completing. So what that tells me is not many of those sales fell out of bed. Lots of people still completed in November. Since then, I think the data has got even worse. I think people are getting more scared. So I think we're going to see a sharp drop in that in the next month or two. And remember, we're going to do this every single month. So please do like and subscribe to this channel. Mortgage approvals from the Bank of England. This is more recent data. So this is sales that agreed, people have got valuations done, and the mortgage has been approved. Minus 33% year on year. That's a huge number, and that's recent data, and that sort of ties in with the RICS. And RICS stands for the Royal Institute of Chartered Surveyors, and they are representing a minus 38% in terms of buyers. So if we're saying that mortgage approvals are down minus 33%, Buyers minus 38%. This is more recent data, in my opinion, and ties into the reduction in house prices. So where do we go from here? I think house prices are going to continue to soften. I think we're going to see that over the next couple of months, and I'll bring that data to you. I'll be really honest, open and transparent. I'll tell you what my portfolio is doing. No matter whether it's going up or down, I will report that back to you. In terms of rents, I can tell you live, rents are increasing. We're able to push our rents up. There is a reduction in supply. People are selling their properties, and that means that rents are increasing. So there is still a strong case for buy-to-let. There's still a strong case for HMOs. There's just this rebalancing that's going on at the moment. And it is a very, very nervous time for lots and lots of people. Now, what do I think the opportunity is? I think the opportunity comes not this month, probably not next month, probably sometime March, April, May time, when people are reaching a level of pessimism, in my opinion, that will allow me to negotiate. I want to go out there and buy that £200,000 house, and I want to pay, I don't know, £165,000. I want to get a really big, hefty discount, even once it's been dropped and dropped and dropped. Maybe those times don't come, but in 2008, that represents my very first purchase. It was up for 200,000. 3 years previously, it was sold, I believe, for 230,000. I bought it for 165, which meant that I made money on the day that I completed. And I want to represent that again. I want to do that again. And I think the opportunity for that is coming. And maybe the discounts aren't going to be as big as 2008, but if the discounts are 10%, 12% on a 200 grand leveraged purchase, that represents an excellent return on investment. Let's just consider it at 10%. You'd have a £20,000 baked in discount. Now, on a 200 grand purchase, you're putting down 50 grand. That represents about 40% of your initial investment returned as discount. So when you come to refinance in a couple of years' time, that deal is looking exceptional. And that's what happened with my first property. It's what's happened with a few of my properties where I've managed to secure a big discount. The last couple of years, those discounts have been absolutely non-existent. The market's been going in one direction, everyone's known it, and you've not been able to secure any discount at all. The best you've been able to do is buy today and complete in a few months and see the house prices appreciate over that period of time. But this is going to change things and give an opportunity, in my opinion. What are your thoughts though? Let me know down in the comments. I'm massively interested. Big times ahead, interesting times ahead. I think we're going to have a really good journey for 2023. Lots and lots of opportunity. Join me on this, like and subscribe as always, and let me know in the comments what your thoughts are. I will see you on the next video. Cheers, guys.